Did you know that a single year in history can become a symbol representing a moment of profound economic turmoil? A lot of people think 1929 is one of those years, just like 1776 or 1492. It was the beginning of the Great Depression, a time when the American economy came crashing down, leaving deep scars on the hearts and minds of people. But what if I told you that one of the world's most successful investors, Warren Buffett, believes that an upcoming crash could be even worse? Yes, the Oracle of Omaha himself has insights into the implications of such a crash. So join us as we dive into the last impact of the Great Depression and uncover Warren Buffett's perspective on the crash, all while exploring the possibility of an event that might shake the world even more. The economic collapse of 1929 had a tremendous impact on individuals and families. It brought about a time of great uncertainty and hardship. People lost their jobs, their savings, and their homes. It was a period filled with anxiety and fear about the future. 1929 became a symbol for reminding people of the widespread economic turmoil. Just the mention of the year evoked memories of financial devastations and the struggles that followed. It represented a time when everything seemed to crumble, leaving people feeling helpless and unsure. The crash shattered the confidence of people in the economy and financial institutions. Many had placed their trust in the stock market only to see it crash down before their eyes. The sudden and drastic decline in stock prices eroded faith in the system. People questioned if they could ever trust the economy again. In the aftermath of the crash, individuals and families had to rebuild their lives from the ground up. They learned to be cautious with their money and to approach investments with skepticism. The scars of 1929 lingered, serving as a reminder of the importance of resilience and the need to be prepared for economic uncertainties. The stock market crash of 1929 hit Warren Buffett's father hard. At that time, his father worked as a security salesman, mostly selling stocks. But when the stocks fell by a staggering 48%, his confidence took a hit too. Suddenly, he found himself in a dilemma. How could he face the very same people he had sold stocks to just a few months ago, knowing that their investments had lost almost half of their value? The impact was not just financial, it was emotional as well. The thought of meeting those clients now facing significant losses filled Warren Buffett's father with fear. It weighed on his mind, casting a shadow over his work. The stock market decline had scarred the minds of people, and he could feel the weight of that scar in his interactions with clients. Imagine the emotional toll it took on him. The memories of 1929 became a symbol, a reminder of the hardships and uncertainties. It wasn't easy for him knowing that he had sold stocks that had lost so much value, but amidst the fear and uncertainty, his determination and resilience shone through. Warren Buffett's father faced the challenge head-on, demonstrating his strength and adaptability. Despite the difficult circumstances, he persevered and continued to provide for his family. His story is a testament to the human spirit, the ability to face adversity and keep moving forward. The stock market experienced a recovery of 20% within a 9-month period after the crash. However, despite this improvement, the deep psychological scars remained embedded in people's minds. While the fall of 1930 was initially perceived as a recession, it soon became evident that it was the extraordinary reality of the Great Depression. The impact of the Depression went beyond economic conditions, and it left a lasting imprint on individuals and their perception of the American economy. Now, the Federal Deposit Insurance Corporation, or FDIC, established in 1934, plays a significant role in ensuring the stability of the banking system and restoring people's trust in it. The FDIC provides deposit insurance, which means that if you put your money in a bank covered by the FDIC and the bank fails, your deposits are protected up to $250,000. This deposit insurance has helped restore faith in the banking system because it assures people that their hard-earned money is safe. If a bank fails, the FDIC steps in and reimburses depositors for their lost funds, up to the insured limit. This has given people confidence to keep their money in banks, knowing that even if something goes wrong, they won't lose anything. The FDIC also plays a crucial role in preventing future widespread bank failures. By regulating and supervising banks, the FDIC ensures that they follow sound banking practices, maintain sufficient capital, and manage risk appropriately. This oversight helps identify and address potential issues before they escalate, reducing the likelihood of bank failures and the associated negative impacts on depositors and on the economy. The Great Depression had a lasting impact on how people viewed the American economy. Memories and stories passed down from parents shaped the mindset of future generations. These tales became symbols, like saying 1776 or 1492. The crash of 1929 became deeply ingrained in people's minds. The experience of the Great Depression also left a mark on individuals' perception of the economy. They witnessed the devastating effects of the stock market crash and the widespread bank failures. These events created a sense of caution and skepticism about financial institutions and the overall stability of the economy. However, despite the scars left by the Great Depression, the American economy demonstrated remarkable resilience. Over time, the country recovered and prospered. Through World War II and subsequent challenges, the United States continued to endure and thrive. The lesson learned from this turbulent period is clear: never bet against America. Despite the hardships and uncertainties, the American economy has consistently shown its ability to bounce back and grow. This resilience is a testament to the unwavering spirit and ingenuity of the American people. The Great Depression's impact on people's perception of the American economy may have been significant, but it serves as a reminder of the strength and resilience that defines America's economic landscape. The importance of understanding history to navigate future economic challenges cannot be overstated. By studying past like the Great Depression of 1929, we gain valuable insights into the impact of financial crises and their long-lasting effects on society. Learning from history allows us to identify warning signs, implement necessary safeguards, and make informed decisions to mitigate the risk associated with economic downturns. In the face of adversity, America has always shown remarkable resilience and an unwavering spirit. And the Great Depression tested the nation's resolve, but it did not define its future. With perseverance and innovative solutions, America emerged stronger and more determined to prevent similar catastrophes. The American spirit endures, reminding us that even in the darkest of times, progress is possible. As we move forward, let us embrace the lessons of history. Let us remember the sacrifices we made, the mistakes we learned from, and the triumphs we achieved. By doing so, we can navigate future economic challenges with confidence, knowing that America's ability to overcome hardships and continue its progress remains as strong as ever. So, do you think we can quickly recover if another financial turmoil happens again? Let us know what you think in the comment section down below. That's it for this video. Don't forget to express your gratitude by clicking on the thumbs up button, following Capitalista, and enabling notifications to stay updated and won't miss any of our future uploads. See you next time and stay safe.